week, traders have been vulnerable to news on developments of the trade conflict between the United States and China. In panic, they invested their funds in safe haven assets. Nevertheless, the trading week is coming to an end on a quiet note. Traders shrugged off fears and currency pairs are following trajectories set by fundamental data. What macroeconomic data is due next week? Let's find out from a video calendar on InstaForex TV channel. Market-moving reports will appear in the calendar from Tuesday. Traders will take notice of reports on the UK labour market. The Brexit jitters are taking a back seat, so the pound-dollar pair got stuck sideways, awaiting new triggers for a direction. Analysts have optimistic expectations of a claimant count change and employment growth. That's why the pound sterling could receive a boost to regain at least some of earlier losses against the US dollar. Thus, we expect a correctional climb of the pound-dollar pair. The sterling will find it hard to show resilience to the US dollar. The British pound will have to resist the greenback amid upbeat expectations of inflation data from the United States. Experts on the US Central Bank frequently voice concerns about sluggish consumer inflation. However, analysts foresee an uptick in the CPI to 1.7% in July in the early batches. Besides consumer prices in the United States are expected to grow 0.3% month-on-month. If the forecast comes true, demand for the US dollar will increase notably. Nevertheless, the inflation data will produce a short-term effect. Indeed, economists view such data as a barometer to measure health of the US economy. However, in the context of the trade war, inflation data is not an accurate indicator. A few words about the fallout from the trade war. On Wednesday, China is due to release a report on industrial production for July. The consensus suggests a slowdown in the output of the key sector of China's economy. Thus arouses worries about conditions of the global economy. Nevertheless, the forecast may not come true like it happened lately with an unexpected increase in China's export sales. If the actual data confirms the negative dynamic, this will be bullish for the yen and trigger sell-off of the Australian dollar. Investors cannot neglect the negative trend in the global economy. They express grave worries about economic conditions in most advanced countries. Today, traders were astonished by dismal GDP data from the UK. On Wednesday, traders will be alert to GDP data from Germany. According to flash estimates, Germany's economy is likely to show a flat reading of the economic growth in the second quarter, but the actual data could discourage investors. That's what happened with the GDP data for the Eurozone. The first estimate promised economic growth of 0.4%, but the actual data revealed a minor 0.2% gain. On Wednesday, the Eurozone will present the second estimate of its GDP growth. Apart from the above said reports, it would be a good idea for traders to turn attention to other economic data. As I said earlier, the economic calendar is almost empty on Monday. The only report worthy of note is a monthly budget statement from the United States. On Tuesday, traders await more interesting events. Germany will provide final data on consumer inflation. Besides, experts from the ZEF Center for European Economic Research will report on economic sentiment in Germany and the whole euro area. On Wednesday, it makes sense to consider inflation data from the UK and industrial production data for the Eurozone. You are watching Forex Trader Calendar on InstaForex TV channel with me, Kate Stichinova. We wish you profitable deals.